finding out if he's involved in some kind of illegal activity and unethical practices or not on their systems, right? So this is just a badging system. Plus, job rotation can also improve the job satisfaction as well. Sometimes you become bored by doing the same stuff, right? So you are moved to the other department. When you do the other department, it increases your learning process. And when you come back to your original job, so you would be very smart and you would be maybe taking less time to do the job before you were doing that one. So again, you make fire-proof vaults. Why is important? Because if you make a fraud and you know that I saved my files over there, so what if there's a fire over there and every record is just burned, right? So I may have a chance that I may, skip from this allegation or something. You install security cameras, you have a fidelity bond. Okay, if you are working for me, you are not allowed to work for my partner or even talk to my partner or even apply a job over there. After you resign here, you must wait 3 years, and after that you can go to my competitors. So fidelity bonds are very important in software industry, especially Google workers. When there is a constant this personal acquisition war between Apple, Microsoft, and Google as well. So Google employees are all Google is always after top brains of Microsoft. Okay, work for us. We're going to give you 3 times salary. And Microsoft is also working with also in search of good talent. They are in Apple. Okay, you are a good software developer. We know that. Okay, just come for us, and we will give you 5 times salary. So whenever you are hired by these big corporations, they give you a fidelity bond. You cannot work for our competitors, and if we fired you or if you resign or something, your job is done, you cannot work for our competitors for 3 years or 5 years. If you are found, you would be given $3 to $4 million, $40 million fine or something. Give you a huge amount of fine for that one. Loss prevention specialist, you hire a consultant once in a year who come to your company in a disguised, and you see that okay, there is some kind of procedure that need improvement. So this kind of stuff is very much applicable in our fast food industry, in McDonald's, in KFC, for example. They calculate that okay, if order is over there, it takes 8 seconds from order to pick up line. So how we can make a whole burger, their order complete in 8 seconds? How you can improve? Or maybe you design this kind of glove, this kind of like bag, or this kind, so that order is complete. Whatever order they gave you, like 100 burgers, if they gave you 100 burgers, so can you done it in 8 seconds? So this kind of stuff, they always hire some kind of management consultant who gave you regarding loss prevention or also improvement efficiencies techniques as well. There is alarm system, okay, and then mandatory. I gave you the example of that. A cashier as well, also gave them mandatory vacation as well. Okay, you work hard for the whole year, so we are giving you mandatory vacations. Go to the hillside. Company is going to bear the expenses. So you heard this kind of stories, right? Okay, my father has given like this kind of mandatory or this kind of vacations paid by my company. And the reason behind is that they are safeguarding their controls. This worker is working on the same job over the whole year proactively. Maybe he's working for some opportunity or developing some loophole or maybe planning something big. Just give him some clear his heads, and behind that one you also check that okay, whether this person is doing right or not. It's like that. Okay, internal control for e-commerce. E-commerce is a new amazing technology, but it has its own drawbacks. Viruses, Trojan horses, stolen credit card numbers, So pitching expeditions. So there are a lot of stuff. So you click on the link here, but new sites will come. I want to buy on Taobao, but when I click it, it take me to the Tmall or take me to somewhere else. So it's this happen, yeah. Most of the time it happens. So you establish encryption, firewalls, and other kind of stuff to to have extra layer of protection and to in advance proactively you try to reduce the fraud system. So the limitation is that you must apply the cost and benefit. You are a small company and you are establishing all kind of stuff. Of course, these have huge cost. If you are purchasing the corporate version of Windows, it's a huge cost. So we are using Windows or something in our computer. That is student version, they know that. Unprofessional version, they know that. But if you buy the professional version for corporate version, huge cost. If you buy the antivirus system or antivirus system and all those stuff, huge cost is involved. If your sales are not like this much and you are applying these kind of stuff, so remember that you would be going for a loss. So apply till the benefits outweigh the costs. Otherwise, you would be having a loss. Okay, before going to discuss this cash, now we are actually going how we are going to deal with this kind of stuff. Now here the numerical starts. So before going into this one, let's have a 10 minutes break and then we start from here. Okay guys, welcome back after the break. So let's just talk about the bank reconciliation and the uses of bank reconciliation. Okay, first of all, bank reconciliation. Before bank reconciliation, let's talk about the how to control the bank account. Fairly obvious. We have a signature card, so bank have some kind of specimen. So if you sign it, the bank match your signature with the check signature. There is a deposit ticket. There is a time to deposit over there. Plus there is a check. Check also involves some kind of how when check was returned, how much amount, and then the bank will give you bank statement, right? Bank statement. So if you open a bank account with the bank also give you the statement, quarterly basis, monthly basis. So you receive some kind of postage or emails, or you can check it through your bank account as well. What is the statement between 1st of October to 27th of October, right? So at the end one is the end time is bank reconciliation. So let's talk about the bank reconciliation. So this is like a check, see? So there's a serial number of the check, you match it, amount is there, their date is there, right? Against you make some kind of like to whom you are paying that. It's pay here, like to your signs and all the signs. So this bank, check itself give you a lot of information. Let's talk about here. So this is the bank statement that bank gave you. So your bank account, essentially we also call it a cash, and your cash book is two different things, right? So some information as an accountant to the company you don't have, and some information bank don't have. For example, if you gave authority to the bank that if customer directly instead of paying me, pay you, and you are receiving the customer amount on our behalf. So this bank is receiving the amount that customer paid to on company's name. So when checks directly come to the, or money directly comes to the bank, it means the cashier or the accountant who is recording the transaction, he don't know that whether this customer paid the money or not. Plus bank charges. Bank charge you the money, right? But you don't know until you receive the bank statement, right? When you receive the bank statement, then the accountant is aware of, okay, this is the bank charges, right? Similarly, the in transit, deposit in transit. What do we mean by deposit in transit? That you deposit or you pay, for example, you pay the check to your supplier, right? And supplier didn't present it to the bank. According to you, $400 that you draw the check of $400 you have to pay to your supplier. You write down the check. It means cash is decreased from your books, company's books. But in bank account, those 400 is not decreased. Why? Because the supplier, he didn't present the check to the bank, right? Plus, you deposit to the bank and it takes time. For example, person go and you deposit the amount and then receive, and it takes some time. Maybe if you send the cash on the deposit on Friday, close to when bank is about to close, so they keep up your money, or they not money, the check money is going to be transferred like in matter of seconds. But if you receive the check from customers, so in your books you receive, your cash is increased, but you didn't present it to the bank. You present it to the bank, bank needs 3 days to clear, and after that the money is into your account. So 3 days it is in transit, payment in transit and money is in transit, right? So normally deposit in transit, which means your cash books are increased, but banks is showing you less cash. Why? Because it takes 3 days to clear the check. So when you present the check, banks need 3 days and then the monies come to your account. So it means it is normal that your cash balance is not equal to bank balance, right? For example, in this statement, the bank balance is $5,900, right? And in your books,